just Greg here with a market update. Okay, what a wild start to the week market-wise. We are seeing some huge moves across all asset classes. And look, the main focus though obviously has been the US equity markets, because that has led a lot of this cross-asset market volatility. And we've seen like the worst falls in US equities that we have seen since August of last year. So it is meaningful. To put it into perspective, the lows in US equities overnight, S&P and NASDAQ, S&P was 10% from its all-time highs, while NASDAQ was 15% from its all-time highs. So the tech sector certainly is leading the sell-off, and certainly the Magnificent Seven, which were doing so well, floating all the boats to record highs, are the ones that are getting hit the hardest at the moment. What is causing this big sell-off? Look, I suppose it's no surprise. Everyone knows. You don't need to be Einstein to work that out. And it is to do with Trump and Trump's tariffs. There is not one session that we do not get headlines regarding tariff policy, and last night we saw new headlines again that were very market unfriendly, and that was the trade war between the US and Canada heating up. Ontario, a state in Canada, supplies electricity to the US, to about 1.5 million people in the US. The governor of Ontario basically said that he was going to impose a 25% tariff to all exports of electricity to the US. And furthermore, he actually said if the trade war continues, he's actually thinking about turning the electricity off to the US customers. So obviously Donald Trump did not take these comments lightly. So he came back and said that he would impose a further 25% tariffs on steel and aluminium, tariffs that are going live today on Wednesday. So that means that Canada would get 50% tariffs on steel and aluminium. So and furthermore, Trump also basically said that if Canada did not rethink the electricity policy, that he would damage the Canadian economy in ways that they've never seen before, and would be written about in history books for many years to come. So these are the sort of headlines that have been hitting the market, and obviously are not risk friendly. And yes, we did trade and make new lows in US equities overnight on the heating up of the trade wars between US and Canada. But towards the end of the session, we did see cooler heads prevail, and it seems as if Canada now is rolling back the electricity tariffs, and now Trump is also potentially rolling back also the steel and aluminium increase of 25%. So look, it's in a complete mess out there with these headlines, and markets obviously hate uncertainty, and even just the irrationality of how these tariff policies are chopping and changing so quickly, even intraday. So anyway. The big question the market is obviously asking is, when do we see a bottom for this equity market selling, and when do we potentially see risk on basically come back into the markets. So look, that's a very hard question to answer, because the thing that's been driving driving markets lower, the equity markets, has been tariffs. They're not going away. And in April next month, early next month, we're actually going to see US reciprocal tariffs for the rest of the world. But look, in the short term, there are a couple of things that may change the status quo. One is that we do have some top tier US data out tonight, and that's US CPI inflation data for February. So I'll just start off by saying is that the February data will not take into effect any of the tariff increase in prices, for the simple fact is that those increase in tariffs have only become alive in March. So it'll only be further months ahead. So when we go into April and May, that we'll actually start to see potentially increased inflation from those higher tariff policies. But anyway, look, tonight's inflation data certainly is important. Market, what are they expecting? So headline, they're expecting year on year for inflation to fall from 3% to 2.9%, so just marginally lower. Core CPI to go from 3.3% to 3.2%, marginally lower again. Look, no doubt, anytime you see CPI and inflation printing lower, that is a positive. So if we see those numbers come out the way they do, and if we potentially even see those numbers come out even below expectations, the market's going to like that. So that will be a positive and potentially, will stop the selling in the short term. God help us if the numbers come out above expectations. If that does happen, I would imagine the selling will intensify. We'll see new lows and obviously blood on the streets. So not good. Post CPI numbers though, we do have the Bank of Canada meeting about 2 hours afterwards. Bank of Canada, BOC, is looking at cutting rates, so from 3% to 2.75% by 25 basis points. That is expected, but look, markets love rate cuts, so potentially that in the short term tonight could also be a positive for markets. Moving along though, next week we do have a Fed meeting. Now, if the Fed does actually look at the current volatility, what's happening, and obviously recession fears are also entering the market at the moment, and we do have a dovish meeting. Certainly they're not going to be cutting rates next week, but if they do prepare the market does want rate cuts. It's trying to price in 3 before the end of the year. If we start hearing from a Fed saying that may happen sooner rather than later, market will like that. So next week potentially there could be something there that also could be a positive and stop the current market rout. Okay, one market that is worth mentioning that has actually seen a bit of the selling stop is the crypto market. Bitcoin has had a very good bounce overnight. Yes, we did trade through that important critical support of 80,000. We saw some liquidation, saw it go trade down towards 76,000, but it's opened up here in Asia, back above 80,000, 83,000, so had almost a 6% rally. So there are some signs in other markets where maybe we have seen some of the selling, at least for the short term, stop. Look, key takeaways anyway moving forward with the trading is that, look, we still are obviously in volatile markets where we are seeing wild swings in both directions, in the same session, across multiple asset classes. So it is best to size down your trading size and obviously try to keep stop losses at a reasonable level. And if you do see something on the table, it's probably a good idea to take some partial profits because they may disappear very quickly. Good luck with your trading, and we'll catch back in with you soon.